All right, welcome everybody. We are here to learn how to swing trade like a pro, and we have a special guest here with us tonight, Gianni Di Poce. I'm gonna bring him in now. A lot of you already know him, but this is the man right here behind the breakout stock picks. Gianni, come on, man.
How's it going?
Good, man. How are you doing? How are you treating these trading days today?
Well, I'll tell you what, it's been a volatile week, but it's not about how you start. It's more so how about you finish, and we finished really well here today on Friday. So it's looking pretty bullish heading into the last week of July here.
Okay. And just what's your market? Well, really briefly, Gianni, I mean, for those that don't know you, can you just go a little bit into your background? I know you have a lot of institutional training and all that, just for everybody to know.
Yeah, absolutely. So I've been in the digital trading pits, as I like to call it now, for almost a decade. But over half of that, I'd say 5-6 years, I was in the advisory world. And during that time, we had a nice big book of business. I was the main trader on a $250 million portfolio at that time. Now that I'm gone, it's probably a little bit bigger, just because markets grow through time. And during that time, I had the opportunity to work pretty closely with a lot of the big dogs on the streets, your Fidelities, your Vanguards, your Schwabs, so on and so forth. Worked pretty closely with them, learned some of their tricks of the trade, pun intended, and was able to incorporate that through trial and error into a strategy that is more appropriate for individual traders and investors, because we have certain advantages that they do not have. And it's all about capitalizing on that scale difference. So here we are. Glad to share that information with you all here today.
Good stuff. So there you have it, guys. Gianni, he's been on both sides of the coin, and that's ultimately what you want, right? Somebody who's been on the inside and on the outside and knows the ins and outs. So that's very good, man. Very good. So Gianni, let's start with a little market overview. I know that you look at the whole market, right, as a one whole approach, and a lot of people like the way that you pretty much break down the news and how you are able to look at the interaction between, let's say, interest rates and certain sectors and how they correlate to each other, commodities and all that. So what's your current take on the market overview right now, if you want to break down the overall market now for everyone?
Sure thing. So I came into this past week a little defensive, and then on Monday I thought I was a genius. I was a little caution. We picked up a couple shorts. But by the end of this week, when you close out at a new all-time high, especially on a weekly level, it really doesn't get much more bullish than that. So I'm still pretty bullish equities. What I'm seeing across the entire financial markets right now is it looks like the dollar it's close to, but the dollar is trying to start a new bull market. All we have to do is clear the highs from late March, and we'll have higher highs and higher lows. And that comes with, quite a few repercussions. The biggest one, I think, is that I think growth and tech are going to start to outperform significantly again. And we're starting to see that already. You have major breakouts occurring in stocks like Apple and Amazon. And, when you look at what's going on with those two stocks, and keeping in mind that, they're some of the biggest companies in the world, and knowing that in ETFs like QQQ, they have such big weightings in that ETF, it's just hard to be bearish in this environment. And then we have to factor in, the notion that liquidity levels are still very high. The Fed, there's all this talk about raising interest rates. Well, I just have a really hard time believing that the Fed's going to raise rates, especially on the short end of the curve, without first tapering a QE program. A lot of people seem to conveniently forget that the Fed's still doing QE. And if you look back in time through periods of quantitative easing, they've been on and off now for about 12 years. There was only one instance during a period of QE where equities declined 20%, and it was in 2011. Every other time that we've been in a period of quantitative easing, it's been a time period mired with low volatility. And just even look what happened this past week. We had a pretty bearish start to the week, but buyers stepped into the picture. Whenever there was someone selling, there was someone there on the other end of the trade to buy up those shares, to gobble up those sales. And folks, that's liquidity. That's what we want to see. Now, if we look back to last year, what happened in March, Go look at credit spreads. They blew out. Liquidity evaporated. There was essentially a no bid scenario. So a bunch of people rushed to the exits at the same time, and there was no buyers. There was no bid. That's when you get those large gap down days. The no bid gap downs, and those are really, if you're short, it's a great position to be in. But we're just not in that environment right now. The liquidity is high. At that time, last March, liquidity evaporated. So, and another thing too is the sentiment. Heading into this week, like I said, I was a little bearish, and we had a couple short positions. But a lot of people are look at sentiment ratings, whether it's the fear greed index that CNN puts out, or the American Advisor Institutional Survey, or whatever it's called. A lot of advisors even are bearish too. There's a lot of fear, and we just closed at all-time highs. So there's a reason that the saying in markets that goes, a bull market climbs a wall of worry. And that's exactly what we're seeing right now. There's all sorts of reasons that we could think the world's going to end, new variations of COVID, so on and so forth. But the fact of the matter is liquidity is high. We're not in a euphoric environment, which is typically the type of sentiment that we see when important highs form. There is no euphoria right now. There's all different reasons to be scared, so on and so forth. Now, we're talking about the dollar starting to rally too. Now, when we think about that, a rising dollar is typically deflationary in nature. And that's why I like the growth trade again, because the 2010s was a deflationary decade. We basically had 10 years of deflation from 2010 to 2020. And, so that has some repercussions, especially when we look at crude oil. Crude oil's had a really nice run. That commodity has a greater, inflation, that has a greater influence on inflation expectations more so than any other commodity, because it's more than just energy and what you pay at the gas pump, right? Crude oil is used in so many plastics and other items downstream from the, crude oil itself. So it has a very large impact on inflation expectations. So crude oil's had a nice run in the last, 13, 14 months here. If you factor in the negative prices, when it went down to like negative 35 a barrel or something, it's up over $100 a barrel in just over a year. Now that's a pretty significant price move. So I think that the inflation trade was overcrowded. Now, if inflation starts to, level off a little bit here, we've already seen bonds bid up a little bit, but now I'm actually concerned about bonds possibly forming a high. But if interest rates do start to rise again, I do expect that to benefit the dollar. Now, why would rising interest rates benefit the dollar? Okay, I'm gonna explain how a global hedge fund manager looks at the market, if you will. If you're a billion-dollar pension fund in Europe, okay, and you have a mandate according to the rules and the charter of the pension fund that you're running, that you need to allocate a certain amount of money into fixed income. Well, what are you going to do if you're in the Eurozone and you're getting 0% interest rates? Well, you're going to sell euros, buy dollars, and buy US denominated bonds, dollar denominated bonds. So we call that the carry trade. The carry trade was very popular back in the early to mid 2010s. And I don't really hear that phrase thrown around much anymore, but the carry trade was a big thing. And that's essentially what it is. You're basically borrowing money in one currency, using it to buy another to capitalize on the interest rate differential. Because if you can make, 1.5% on a 30-year treasury, why would you buy a 30-year euro bond paying you nothing, or in some cases paying you, taking money via negative interest rates? So I think that the dollar, I'm not a fan of the hyperinflationary scenario, just because that money's got to go somewhere. Now, for hyperinflation to ever happen in the US dollar, one, it would no longer have to be the reserve currency of the world. I've scoured the texts of economic history going back thousands of years, and it does exist, believe it or not. And I've never seen a situation where a reserve currency of the world had hyperinflation. Now, there are a few caveats to that, and I'll explain shortly. But people, compare, we're printing all this money, it's going to be like Weimar Germany. Well, guess what? The Deutschmark at the time was not the reserve currency of the world. It was the British pound. Okay. So when we're comparing economic history and situations, we better have our ducks in a row, because we're comparing apples to oranges. A reserve currency of the world is not the same as just, your regular currency. So that's what I'm seeing at a macro level. I think in the short term, the inflationary trade, is a little overhyped. We did at the same time, though, see a little bit of a reversion to the mean in these last couple of weeks. Bonds have been bidding since they hit a low on March 31st. Now, like I said, if we have a high here in bonds, interest rates should start to creep up again. And I think that's going to create a carry trade in the US dollar. So that's what I'm seeing on a macro front. Now, what does that mean for other asset classes? Well, let's touch briefly on precious metals. I can pull up a chart here. I had Bitcoin, and don't worry, we will talk quite a bit about cryptocurrencies today too. This is a daily chart of gold. Now, let's actually switch over to a weekly chart, because there's a saying in trading that I really like, and I didn't come up with these. All these phrases I drop, I'm not the progenitor of them. There's a lot of people that are very smart before me that came up with these phrases. But when in doubt, zoom out, right? So gold has been it's in a long-term bull market, right? Higher highs and higher lows, but this lower high that we had in June is a concern. But when gold rallied between September 2018 or August 2018 was the actual low to the high of July or August of 2020, it happened during a period generally of falling interest rates. Now, interest rates, like I said, they bottomed in March of 2020. But gold is not necessarily an inflationary hedge because it rose in deflation for 2 years. We're looking at an example right now as to why gold is not just an inflationary hedge. It's a hedge against uncertainty. So one of my concerns right now is if interest rates start to rise again, that might be bearish for precious metals. But it would be bullish for stuff like crude oil and copper and the grains, which have been on a tear since last year as well. So that's where we're seeing the precious metals front. And if the dollar starts to rally again too, I can't really see that being a favorable environment for gold. So what I'm looking at in gold here is if gold takes out this low from March, it's going to be nasty in the precious metal space. Now let's look at silver, because I actually do think there's more value in silver. The silver chart looks a lot better. We had that high where the Reddit traders were trying to short squeeze silver. It didn't quite work out like AMC and GameStop. But hey, I love the concept. If you're going to be irresponsibly short a stock, you might as well get burned, right?
Right.
There's a reason why there's two sides to a trade. So why do we have to go out of our way to protect these people managing billions of dollars? I don't understand that. But so we had the secondary lower high in May too. But same thing here. If we take out this level of support around the 2260 area in silver, it's not going to look good. Now I'm still constructive. Now there are situations where metals can rise if interest rates do start to creep up again. But that's not been the correlation of the last 2 years or so. Now, correlations can and do change. One case in point of a correlation changing over the last, basically in May, it broke. If you look at what happened after equities bottomed in March of 2020, Bitcoin and many of the other cryptocurrencies started to rally in tandem with stocks. Now, from a traditional macro standpoint, there's no real reason why that would exhibit a strong positive correlation. But nonetheless, the correlation between crypto and stocks was above like 80%. And sometimes it crept up into the 90% area for over a year. So basically between March 2020 to May 2021, that correlation broke in May 2021. And if you ever saw those videos we did for the elite subscribers, we were saying on Bitcoin back in May, hey, we have a secondary lower high. I'm talking about Bitcoin. Let's pull up some charts for Bitcoin here.
This is for the sorry, Johnny, just really quick. This is from the elite tier 3 subscription, right? Okay.
That's correct. The elite. Yep. We do video recordings after each. It's 3 times a week. We put out video recordings basically every other day. Let's get a little bit of data. See, because sometimes markets make strong moves in one day, and one day of price action does not constitute a trend. So we can't zoom in too much on one day's price action. So, but when we were doing these videos in Bitcoin, because we cover that in every video basically, when we had this secondary lower high in May, we said, we really do need to be cautious. If we close below this, $48,000, $49,000 level, we could see a washout to 30,000 very easily. And, it's a textbook example of market sentiment, right? Because everyone was, Bitcoin's going to $1 million. I'm like, you people are crazy. Bitcoin's not going to $1 million anytime soon. It might eventually. I mean, it is in a bull market. But I digress. The reason why we were talking about correlations, because the correlations between stock and Bitcoin broke in May. Stocks continue to make new highs, whereas Bitcoin did not. And so what did that tell us? The markets did get a lot more choppy in the last couple months here. We had a few instances of false breakouts. Stocks would start to move above resistance, but then get slammed back down. And as a breakout trader myself, that can be frustrating, but it's a testament to the importance of risk management. We don't need to be right most of the time to make a good living doing this stuff. And we talk about that a lot across all levels of our twice a month publication, our weekly publication, our 3 times a week publication. And then in our chat room, we really hammer that down. You can't take these losses personally if you want to make it in this business, if you want to last in this business. When I first started trading, I just had a really hard time admitting that I was wrong. And I think a lot of new traders have that frustration. Last year, I tell people, last year was not normal. 2020 was not a normal year for markets for many reasons. Not only did we have the strongest decline in the shortest period of time in history, it was worse than Black Monday of 1987, but then we ripped higher. A lot of new traders were scoring 200-300% gains, us included. It was a really good year last year. But when you put that in perspective, if you're just a buy and hold trader, markets annualize a return of 7% per year. Okay, so if you get a 200% return per year, where does that come out in the distribution of returns, right? Think about a bell curve. That's like in the 0.001 percentile. Most of the time, you're not going to have a market like last year. So knowing that we can only play the hand that we're dealt, the market's bigger than all of us. You can only play the hand you're dealt. It's a testament to the importance of risk management. And so, with all the new stock picks that we put out, we talk about stop losses. So we got the Bitcoin chart up right now. I actually like I was pretty bearish on Bitcoin coming into this week too. I was saying, hey, prices in Bitcoin could fall to 22, 24,000. But what do we have here that happened on July 20th? A possible secondary higher low. This is step one in the potential establishment of a new bull trend. Now, what would need to happen for a bull trend to unfold again in Bitcoin? Well, we have this, very slight high from late June. If we clear that, if Bitcoin closes above 35, let's just say 35,902. Okay, if we close above that, arguably have a higher high, but I would really like to see Bitcoin close back above this mid-June high. Okay, so we closed at 40,526 that day. If we can clear this level of resistance here, the bull's back, baby, and the trend is your friend. And there's going to be a lot of happy people in Bitcoin, those who have held through. I do think that the institutional adoption is increasing significantly, and hey, they want to get in on a bargain too. So
no doubt. Yeah. I mean, Bitcoin is gaining, it's been gaining popularity. So obviously you take all this into account, Gianni, because I mean, from your institutional training that Bitcoin and these sort of asset classes do have an impact on equities, right? Which is a different asset class. It's all correlated, but ultimately finding that correlation is really what people struggle. We did have a ticker here on chat, Tesla. I don't know if you want to throw a chart there, give your opinion on that.
Yeah, absolutely. One of the phrases I like to drop is the principle of interconnectivity. The whole idea that nothing happens in a vacuum in markets, but in real life too. These are principles that stem from natural law, if you will. I mean, so if the dollar goes up, that's going to have repercussions in the bond market and energy markets and stock markets. We touched on that a little bit. I'm not going to get too far into that, but when Bitcoin goes down, if these large institutions own Bitcoin, for example, and they're trading on margin and they get a margin call, not only do they have to close their position, but if they're down enough they got to sell their other positions. And if you recall, back in February, we had that little bit of volatility right around the time that the first bull run of the meme stocks came around. You know, the AMCs, the GameStop, whatever.
Right.
A lot of times, it was situations where those institutions were so short those stocks that they had to sell other holdings to cover their losses, because the margin clerk doesn't care who you are, doesn't care if you're an institution or an individual. They weren't managing risk properly. And they think just because they have these, billion-dollar portfolios, they can neglect risk management. Well, guess what? You can't. But anyways, Tesla here. So Tesla, you know what? When in doubt, zoom out. Let's look at the bigger picture here. This is a weekly chart here. And what I see on Tesla is a symmetrical triangle. So the symmetrical triangle is known to be a continuation pattern. Continuation patterns mean they tend to resolve in the direction of the underlying trend. What's the trend of the stock, Rodrigo? Is it up or down?
Right now, it's definitely looking up.
It's up. Well, it's in a long-term bull trend. Long-term bull trend. Now, if we look, after we made that high in January, short-term, it's been choppy. It's been choppy, but it's been range-bound. It's been building a nice base. Momentum has to build up enough energy. This is a breakout principle. The bigger the base, the higher the space. We like to see multi-week or multi-month consolidations because this is, some principle from, your old physics class too. There needs to be, base building, enough energy built up for a next move higher. So if Tesla can close above this symmetrical triangle here, I like the idea of this being potentially a $1,500 stock. Now, I saw a window pop up on the screen. What do I think of earnings? I haven't really analyzed when I got in the business, I started off as a fundamental analyst, believe it or not. And that was part of the institutional training. But when I was watching the markets on a daily basis, Tesla had a nice bull run like in 2014, 20 to like 2015, something like that. And the stock had no earnings at that time, but it kept going up. Amazon did the same thing. Apple did the same thing for years. To me, based off observing stocks, the perception of a stock matters more than the actual results. Now, eventually, we do want to see results because we don't want a situation like Enron, right, where the emperor.
Hey, Gianni, sorry, don't mean to cut you off here. Just getting a lot of requests about the subscription here, getting some emails and calls.
Okay.
Let's leave the subscription until the end, guys. Right now, we're in the middle of the education with Gianni. So for the time being, we're just going to do the education. If we do have time for the subscription, we'll get to it till the end. Say
no doubt. No, thanks, Rodrigo. Appreciate that. So yeah, we have, I like the idea of this being a $1,500 stock. Now, in terms of the forthcoming earnings, Tesla makes a lot of money aside from selling cars. It's a really unique company. And, I saw Elon on Benzinga did a video with him and Jack Dorsey and Kathy Wood. They had them on the show. I think what was it, Rodrigo? Like the B word? What was the title of it? It was really funny because everyone was scared about Bitcoin, and of course, lo and behold, we won't even call Bitcoin by its name, and that we might have seen the bottom this week again, in typical of sentiment and how that works. Right. But Tesla owns a lot of cryptocurrencies, so if Bitcoin doubles in price again, goes back to its former all-time highs. I'm not really sure how they work that out on their, earnings reports. Do they record that as, income? It's an asset that fluctuates. So I'm not really sure how that is. I live in a place, I don't live far from Benzinga's headquarters actually. And, I'm in Michigan, the automotive capital of the world. And I see a lot of Teslas and it's not a Michigan automaker. It is an American automaker, but where I grew up, it's very common to see people driving American cars, and Tesla is one of them. So I'm seeing a lot more adoption of the vehicle itself, in the automotive capital of the world, for that matter. So I don't think there's any shortage of demand for the vehicle, and the technical picture looks good too. So the whole idea is that price is the ultimate indicator. If you are a trader, say out in California or Montana or wherever you might be, and overseas in Asia or Europe, and you have some knowledge or insight about a stock, you're going to act on that knowledge. That's why I like to study price, because price tells you ultimately what people are doing. If a stock's in a bear market, it means there's more sellers than buyers. Nobody wants the stock. The stock's in a bull market, and it's correlating nicely in a continuation pattern that is suggesting a move up into the $1,500 price range. Then that's, we would have to clear, this resistance level to get to that point. But I do like Tesla. I don't own any right now, but if we start to close above these highs from April, I very well might buy some. And, that's what I'm looking on the Tesla front right now.
Good stuff, man. Good stuff, Gianni. So let's go over some of the winning picks. I know you got a lot there on your pocket. So let's share that with the people here. They definitely want to see, the action take place here.
Okay. So here's one that we had recently. Smith & Wesson. Okay. So on this one, we got long in the around $21. Okay. So what we did is we identified a saucer pattern here. Okay. So we have the upper horizontal trend line acting as resistance, and then we have a parabola U-shaped portion of the pattern. You can see how volatility compressed the trading range that Smith & Wesson exhibited before the breakout got narrower and narrower. Okay, it's indicative of a compression of volatility. Volatility tends to compress before it expands. So we got long, it ripped higher, and I'll tell you what, this doesn't happen even most of the time. We sold right here, right at the high. We didn't get the exact high, but we got out by the close of that day, and we came away with a 67% gain in just a few weeks. So it was a really nice winner. And when you trade breakouts like we do, we want to maximize our gains and minimize our losses. So I would say very comfortably, I'm comfortably saying 80 to 90% of our losses are within 8%. Okay. The rest, sometimes, a stock will gap down. That happens. It seems to have happened quite a bit this year. Sometimes we get out, 12, 13% lower, but that's generally not the case. But if your winners are, 50, 60% and your losers are, 7, 8, 9, 10%, one trade can cancel out one winner can cancel out 6 losers. Now, the good news is that our accuracy is a lot better than that, right? So, if you're right, I tell people this, if you're right one out of every 4 times, your average winner is 30%, your average loser is 7%, you're still ahead. So if you play your odds right, you can be a profitable trader being right just 25% of the time. Now, everything I'm explaining, we incorporate into the twice a month picks, the weekly picks, the 3 times a week picks, the elite service. And then in the chat room, I hammer guys. We had a guy this week that was telling us, what's the name? Sprit or something like that, SPRT. So this stock looks like it's breaking out, but this guy was like, hey, I've been holding the bag on this stock. I'm still down like 50%. And I was like, well, I probably wouldn't sell it today. I mean, it was up 12% just today. And it closed at a new weekly high. Let's take a look at the weekly chart. But I said, so we just closed at its highest weekly level. Now, this stock had some reverse splits and so on and so forth, but this stock looks bullish now. But I told him, I said, hey, I wouldn't sell it today. I think he was asking me about this on Wednesday. So that was 30% ago. So, hey, that's why, we have the pipeline where you can ask the questions live. But I said, in the chance that it does reverse lower, you're already holding the bag on this. If we close below, I think I told him 495, if we close below this gap from July 21st, just get out. I mean, you're already down, 40, 50%, way more than I would ever tell someone to allow themselves to be wrong, because we have to think about opportunity costs too, right? If you're holding the bag on something, you're missing out on opportunities elsewhere. There's always a bull market somewhere. There's always opportunity. You have to have that mindset that there's always someone making money somewhere. Whether you're playing the short side of the market or the long side, you can't limit yourself. I'm wrong all the time. There's very few professions outside of trading where the ability or the necessity, the readiness to admit that you're wrong determines your sustainability, determines your livelihood. I tell people I make a living based on being able to admit that I'm wrong. I mean, would you take life advice, Rodrigo, from someone who was right less than half the time on anything?
I don't know.
Well, that's what I mean. But in trading, you got to do that. We have to reprogram our minds because most humans are naturally optimistic. We like to look forward to the future. The future is going to be better than the past. And so we think in terms of gains. Oh, if I buy this stock, if I put 10 grand into the stock and it doubles, I'll have 20 grand and I'm going to go do this, this, and this. But I want you to think in terms of risk. And that's why we always articulate our stop loss. With every trade pick that we put out, we say, hey, let's get long on a close above 25. Let's put a stop loss on a close below 23. Because
so you always put a stop. Every trade that you send out, it has a stop loss, it has a target, it has 5 bullish reasons as well, the 5 alpha factors that you've always been implementing, correct?
Yeah, so on the twice a month and then the weekly picks, we do three delta factors. That was kind of my first discovery of using factors, a system, being a systems-based trader. It helps to not eliminate the emotions because intuition is an important part of trading too. Sometimes your gut is right, but having a system allows you to navigate an emotional, highly charged environment more effectively. Now, for the elite system, we talk about the 5 alpha factors because we take it a step further. Like you see this momentum indicator up here, the RSI indicator. Let me tell you something. I've been seeing a lot of charts circulating on FinTwit and Twitter and all these platforms in the last 12 months or 18 months since everyone's picked up trading as a hobby, and a lot of people have no clue what they're doing with the momentum indicator. So we talk about that with the elite, how to use the RSI indicator properly, because there is a bearish divergence or a bullish divergence, and I'll explain what those are in a minute, doesn't mean you just jump out of a trade. So a bullish divergence occurs when prices make a new high, but the RSI indicator does not. That typically is a sign that momentum is waning. But sometimes a stock will rally and then go sideways. And as a breakout trader, cut your losses short, let your winners run. I'm okay holding a stock that I have a 20 or 30% gain on for a few days or a couple weeks so that it can build its next base and move on higher, right? But if you don't know how to read momentum according to the oscillators and the indicators, you might get out of a trade too early. I mean, like I said, we take paper cut losses. We'll get out of a stock 7, 8, 9, 10%, but then our winners are big, 30, 40, 50, 60%. I think the biggest winner we ever had in this service, Rodrigo, was last summer. It was Fubo. We were in that Fubo trade, and we came away with like 190% gain in like 6 or 7 weeks. And we were talking about Fubo before people even knew what it was.
And this is a recent trade. Because I remember a while back you had recommended Penn Gaming when it was $17, $18, like back when nobody knew what Penn Gaming was. I don't know if you remember. It was one of the first picks that came out.
Was it Penn or was it Fubo? It was Fubo.
Fubo was the recent one, but Penn was one of the early trades like a year ago that you were like calling out basically.
I think you're confusing it with Fubo. I think it's Fubo.
In the elite one, yeah. But ultimately,
in the elite, no, yeah, Penn, you're right. Penn, we did get like 60% or something in elite. You're right.
Yeah.
You're right. Yeah. Yeah. And then earlier this year we were in on Riot blockchain. Let's see, does this even take us back? Let's see. We got long in February and rode the wave up. We did a gap down. That's when Bitcoin started showing some volatility. We didn't get out nearly as high as I would have liked, but we still came away with like 110% gain in like 2 weeks. So hey, are you going to be mad about 110% gain instead of 150% gain? I mean, at the end of the day, you still more than doubled your money, right? So.
Right. And I mean, ultimately you do this for everybody in the chat room, right? Where like they got a question, you always, go take a deep dive, and the picks for tier 3, they do come with a video, right? Yeah.
The tier 3 comes with a video. And I'll tell you what, Rodrigo, even this last week, there's some great people in this chat room. They gave me an idea and I put it out. Is Novavax. Someone brought the chart to my attention. They're like, what do you think of Novavax? And I was like, damn, this is a pretty good looking chart. There's a couple ways that you could, take this one. You could have a saucer pattern. But, you could even make a case that we have an inverted head and shoulders, right? And the reason why we can call it an inverted head and shoulders that I think is more than likely to break out is because the right shoulder is higher than the left shoulder. That's a telltale sign.
Hey, Gianni, sorry, we're getting a lot of questions here about the subscription, so I'm just going to get it out of the way, guys.
Okay.
I'm going to post here the link for Gianni's subscription. We have it starts with the Breakout Monthly, which is 2 picks per month. Then it'll take you to the Breakout Enhanced. I'm posting the link now. The Breakout Alert is 1 pick per week, and then you have the Breakout Elite, which is 3 to 9 picks per week. Those come with video commentary from Gianni himself, basically breaking down the market, giving you the holistic overview of what's going on. He'll do a portfolio update as well. Ultimately, Gianni really cares about your success here. So I pasted the link there for the newsletter, and I'm posting the link here for the chat room. I did want to let you guys know we do have a special just for today. It's 70% off for the chat room, and the first 30 members that join are going to get a laptop. This is an 8 gigabyte RAM laptop that we use to run all of our programs for trading, and the first 30 people are going to have access to this laptop. If you don't see the laptop in the checkout, that means we ran out. So I just wanted to put that in there because we're getting way too many questions about the subscription, Gianni. Sorry, man. Go ahead.
I like that that you're providing that for people because, you need to have a good computer, a good functional computer that's not going to freeze up on you. And I think that's a great idea. But anyways, I know you care about the charts more. So yeah, a Novavax here. I think this is a stock that could go into the high 300s. Let's look at the weekly chart here. Yeah, I mean, this is a clear uptrend. Doesn't get any more bullish than this. I mean, arguably a symmetrical triangle here, similar to what we observed in Tesla. And I like the idea of this being a stock in the high 300s. Now, I'll give you a clue as to what one of the factors that we use. So we talked about the 3 delta factors. We talked about the 5 alpha factors. One of them is volume. How do we read volume? If we're breakout traders, we need there to be more buyers than sellers. We need evidence of accumulation instead of distribution. So what happened in Novavax this past week? Well, we had evidence of accumulation. And how do we measure whether there's accumulation taking place? Well, we have this wonderful exponential moving average that we overlay on the volume bars, and we use the 20-day or the 20-week, call it the 20-period exponential moving average. And I like to use the exponential moving average instead of the simple moving average because I think across that time frame, 20 weeks, that's like 5 months. 20 days is about a month. I like to give recency bias to accumulation. And the reason behind that is because perception across a stock can change quickly. So I use the exponential moving average because it lends a greater weighting to the more recent periods, whether it's the weekly time scale or the daily time scale. So when we see rising prices like we did this past week on Novavax with a weekly volume bar above the 20-week exponential moving average, it's a very strong indication of accumulation. And this kind of, so what does Novavax do? They make COVID vaccines. That's been a theme in the last couple weeks here in the market. This was Moderna was a trade that we got long. We did sell a little prematurely. It really is painful for me. This past week, we closed out our Moderna long, which was, like I said, really, really tough to do. But you know what? We were bearish to start the week. And so I thought, maybe this bearishness is going to carry over into the other segments of the market, but it didn't. But we identified a cup and handle pattern. We got long. I think it was around here in June. And we came away with a 50% gain. We sold right around here. So we came away with a 50% gain in just a few weeks. But it's one of those things that we continue to rally higher. But, we don't want to chase because it's all about risk reward ratio. All of our breakout buy points are calculated for a reason, okay? Because we're doing it with the idea of managing risk. All of our stop losses are set within 8% or so of the buy point, Now, like I said, sometimes, and I like to trade on closing prices too. So I'll trade at the end of the day. Sometimes, a stock is below the stop loss, we'll be 2% below the stop loss. We'll come away with a 10% loss. But go ahead.
Why do you trade always at the final hours, just so everybody knows?
Yeah. I mean, if you can trade at 3:59 p.m. Eastern time every day, that's wonderful. That's obviously not ideal or practical for everyone every day, unless you're a full-time trader, like I've been able to do. But that's what I like to do when I'm buying breakouts. And there's a reason behind that. And there's a saying in trading, again, one that I did not invent, but I've picked up over the years. Rookies open the market, pros trade the market. So if you don't believe me, look at an intraday chart of any stock, really. And let's pull up an intraday chart. Let me close out of this one. We'll look at an intraday chart, a 15-minute chart of Moderna here. Okay, so what do we see? This is from today. This was at 9:30 and up until 10:30. Volume was above the 20-day exponential moving average. And then what did it do? It tapered off into the end of the day. This was a bunch, and what happened? The stock sold off. A bunch of people were like, "Oh, it's going down. It might be the high or whatever." And then at the end of the day, the institutions came in and bid it back up. Oh, Rebecca, you bought Moderna at 23 in January. 20, was it really that low back then? Look, it's okay. I mean, believe me, I've had my fair share too. But at the end of the day, you're still around trading. That's what counts. Here's another thing too, is I tell people you have to view your stop losses as a business expense. To be a successful trader, you need to approach it like a business. And every business incurs expenses. I can't think of a single business in the world that doesn't have expenses of some form. Losses are expenses. In today's world, there are no commissions. No commissions. The barrier to entry has never been more favorable. So let's see, you bought in January of 2020. So that would have been right around here. Wow. Maybe you could have retired then. It's okay. It happens. I wouldn't buy it today. I wouldn't buy it right now. I think the move's made in the short term, but if you didn't listen to me in the chat room this week when I said to get out at 390 or better, you would still have it. Or 290, excuse me, 290 or better. You would still have it. And you know what? You would have, appeared smarter than me. And that's okay. I don't care about being right. I care about making money. That's a big difference. Because what did I say? I mentioned this to Rodrigo earlier. If someone was less than half the time, if they were right less than half the time in anything in their life, would you listen to them? I know I probably wouldn't, but trading is a different animal. It's a different creature. We need to treat it as such. Let's take a look. Let's take a look at an idea. This is a stock that actually triggered this past week, and I think it's still giving us an opportunity to get long. This is Rada Electronic Industries. The buy, born to be free. I appreciate the kind words. So we had a buy point on this Rada Electronic Industries on a close above $12.95. That was achieved on Wednesday, July 21st. We closed at $13.14. So we're still hovering around. We're down a little bit on the position, but we have. Let's start with the weekly chart rather. What do we see here? A very nice, clean cut uptrend, higher highs and higher lows, baby. It's as clean as it gets. We have once again a lot of triangles, a lot of continuation patterns that we're seeing across many stocks. And what has been the theme that I've been sharing? It's a lot of tech stocks, a lot of growth stocks. This is an electronic manufacturer. I think they have something to do with defense industry as well. I'm a little rusty on that at the moment. But what do we see here? Again, good evidence of accumulation. 2 weeks in a row on higher prices, we're seeing volume spikes above the 20-week exponential moving average. Okay, so I'm holding this stock right now. I own Rada right now. So this is what I see on the weekly chart, and I think this is a stock that's $18, $20 a share. So this could be a double bagger, to borrow a phrase that was presumably invented by Peter Lynch. She was a Fidelity Magellan money manager back in the day. I like Fidelity. They seem to have a lot of good people that work for them. But on this daily chart here, it could be a saucer. Could be a saucer. That's what I'm seeing on this one. Bigger the base, higher the space. This pattern has been built over basically 6 months. So that's what we like to see. Multi-month, multi-week patterns. Look at how it's trading around the moving averages. We don't really talk about moving averages that much, but I like to use them in terms of measuring how extended we might be from the mean or whatever.
And let's go here. MC here. First of all, welcome MC here. We are with Gianni, breakout master here. Definitely love this energy. Love appreciating the education here that we're doing for you guys. I think he has a quick question about Novavax. Kind of falls within that vaccine.
Yeah, absolutely. So thank you for bringing me back to this, Rodrigo, because I mentioned how someone brought this to my attention in the chat room. And that's what we're doing. We're exchanging ideas. I look at hundreds of charts per week. Some weeks I probably get close to 1,000, but that's a lot. I mean, I look at charts pretty much during the day. I do a little farming too, just as a little side note. So in the mornings, I'm not around as much this time of the year. I'm here for the market open, but I get up 6:37, tend to my crops, and then I come back and I look at the markets. But
hey, sorry, Johnny, really quick. Just want to let you guys know we have 20 laptops left. We're already out of. We already pretty much got 10 out of the way. We only have 20 laptops left. So just wanted to let you guys know here so we can get back to the education.
Sure thing. Very good. So again, I keep digressing from the point. Someone brought Novavax to my attention, right? And I said, damn, this chart looks pretty good. This was earlier in the week. It was showing excellent relative strength. Okay. Which happens to be another one of our factors. What is relative strength? Relative strength. If your stock that you own exhibits relative strength, it should be up more than the market and it should be down less than the market when the market's down. So if the S&P is up 2% and your stock shows strong relative strength, it should be up around 4%. On the flip side, if the market's down 4%, your stock that's displaying good relative strength should be down around 2%. So we put out this stock for our elite subscribers. And I had the charts drawn on this earlier. It was either a saucer or an inverted head and shoulders. And we like the idea of getting long on this one. This is the same exact trade that we gave to our elite subscribers. We want to get long on a close above 217.22. So if we can close above this little mini level of resistance here, I'm willing to risk a little bit, before the clean breakout from this higher level of resistance here, and get long now. And we set our stop loss within, where's that little thing to measure the percentage change? So if we got long around here, let's see, the stop loss is around, it's around like 199-ish. The exact stop loss escapes me, but it's basically 8% lower or so from this 217.22 buy point that we had. So MC, so much of what we do on buying breakouts is phrased as such. If then, if the if never transpires, then the then never matters. That was a mouthful. Did that make sense, Rodrigo?
Yeah, a little bit. Yeah.
If the if never transpires, then the then doesn't matter, because it's true.
Right.
It's true. I mean, an opinion and a position are not the same. I change my mind all the time. I'm not vested in my opinion. I care about making money in the market. It's not the same. Like I said, if December 31st comes around of 2021 and my trade accuracy, if I was only right 30% of the time, that means that my actual win loss was 30%, but I'm still ahead on the year. That's a successful year to me. I don't care about being wrong 70% of the time, as long as my account's growing. We have to rewire our brains. Behavioral economics. I was an economics student. Could you tell? I used to fight with my professors all the time, believe it or not, but I was always respectful. I didn't like that and stuff.
That's what they don't teach. Well, first of all, trading is really not taught at universities.
No.
Like I come from a finance background. You barely touch on it. Like they don't teach you really what goes down in the market. So I feel that that's why a lot of subscribers really like the way that you do things, Gianni, because you do bring that institutional thought process, analysis, breakdown, digestion of news into retail traders that really don't have that education. And ultimately, that's what we need to make sure that we're equipping everybody here with, the education, because you want to get that before it's too late, right? I'm sure you're familiar with people that have lost their entire account, their entire life over trying to trade something like GME or AMC without any notion of really what's happening there. So and I was there too. I was there too. I didn't have the education. Luckily, I've been following your trades, and that education really has helped me personally as a trader. But I know it's going to help people really coming from different backgrounds. Ultimately, having somebody with your experience, with your background, is what we're looking for, right? We're just a cohort of retail traders following Reddit chat boards, and we kind of want to find somebody like Gianni, that can break down the news so that, we look at things from an institutional perspective, right? These guys never lose. So you kind of want to follow people that come from that background, that have that training, that ultimately know the inner workings of the market, like Gianni.
Yeah, that's exactly it. And back to the whole Bitcoin thing. It wasn't when I was saying that Bitcoin could drop to 30,000 back in May. That wasn't really popular. People were like, Gianni, what are you saying? Like, Bitcoin's going to 100K, it's going to 1 million, so on and so forth. But there are principles to this game, and that's all we're doing, is we're sharing those principles with you. I have my own discoveries that I've made, and I share those. But a lot of this, I didn't invent these chart patterns. I just had the saucer and the inverted head and shoulders. I am not the progenitor of that chart pattern. One of the, a lot of this stuff is self-taught, trial and error. Like I said, I worked with the institutions. They do use a lot of this stuff too. But one of my favorite books on technical analysis on stock trends by Edwards and McGee, that was written in the early 20th century. And when you plot price on a chart, the patterns have existed for hundreds of years. Because why? Human behavior has not changed. Yes, we have different cultures, different backgrounds, so on and so forth. But at a raw primal level, human behavior has been the same for thousands of years. And it's probably not going to change. Even the algorithms, there's all this hype like, oh, the algorithms, they're always beating the market. Well, guess what? The algorithm is only as good as the programmer. The algorithm is only going to do what the programmer tells it to do. It's a computer. It doesn't have a conscience. It follows a set instructions. So if the programmer sucks, the program's going to suck. So there's no reason to be scared of the algorithms. When I was in college, like years ago, at that time, 70% of the volume on the New York Stock Exchange was already from computers. And so I can imagine what that is now. This is like 7, 8, 9 years ago. So imagine what it is now. It's probably 80% or more. So, again, we share these rules. We share these principles. A lot of people had beginner's luck last year, which is fantastic. I love seeing people make the type of money they did last year. But a lot of the same people are having a more rough time, a rougher go this year, quite frankly, because it's not, we're not having as many FUBOs and Riots and Marathon Digital Holdings. I mean, let's look at Riot and Marathon. I did buy a couple in my own portfolio this past week near this low. We talked about it in the chat room a little bit, but I didn't put any ideas out for the elite service or any of the other levels yet, just because this is one of those things that I'm taking a little bit more of a risk. But I like the idea that we made a secondary higher low here in Riot. But what is Riot on the year? It's pretty much done nothing on the year. It's only up slightly. Let's see. On December 31st, it closed at what? It closed at like $17. It's okay. So it's still up 65%. So I was wrong. It's up nicely. But at one point, it was up almost 400%. Okay. So what this price tells us, when Riot rallied to $79.50 on February 17th, someone bought at that price. And with the service that we're providing here, with the education we're providing, there have been times when I was that person buying at $79.50. Thankfully, that hasn't happened in a very long time, or else I probably wouldn't be here sharing this information with you. But, it took me about 5 years to become a consistent trader. And like I said, I've been doing this for about 10 years now. And so the first few years, I would work really hard, and, I might double an account in a year, and then I would blow it up in like 2 months, 3 months. I mean, imagine that psychologically, the damage that can happen to a trader, the damage to one's psyche, seeing a year work of labor dissolved in a matter of weeks or months. So, okay, we had a couple picks come in. I'm going to look at them. U.S. Steel or CLF. Let's see. So this is U.S. Steel. I think it's going to be CLF. It's CLF. And why CLF? Because CLF is above its 2018 highs. I'm not saying buy these today, but U.S. Steel is not. Let's look at the daily charts of these. U.S. Steel is building a seemingly nice base, but if you want to buy on the breakout, if you want to get cute and live life a little bit on the edge, you can get long on a close above. There is a little bit of a like a broadening bottom type pattern forming here. That's what I see on U.S. Steel. So if we close above $25 on U.S. Steel, you can probe the long sign, set a stop loss within 7 to 8% of your buy point. But I can see why. I had U.S. Steel in one of the I put it out in the elite.
In the elite, I actually did go with that trade, and it went pretty well. Yeah.
Well, I think you're talking. We hit like a 60% gain in U.S. Steel late last year. Is that what you're talking about?
Yes, that's where I got the pick from. I did not know about U.S. Steel. I saw it in one of the picks that you put out.
Yeah, but I put it out again a couple weeks ago. But the buy point never triggered, and so that's why I say buy on a close above. Because guess what? If we don't close above that mark, I want you to be in cash at that point. I want you to be whole instead of just buying something based off of my opinion. Okay, when the criteria isn't even fulfilled. Like I said, if the if doesn't happen, then the then doesn't matter. Okay.
This is the perfect trade that you definitely need to run by Gianni, especially with commodities, because commodities are directly impacted by interest rates and a lot of other factors that mix in. And sometimes traders don't realize all that stuff, but that's why Gianni's here, because he has that training to know how the inner workings are. Well,
I trade commodities as well. So I'm in the futures market. We're talking about buying breakout stocks too. But, when I talk about commodities, I'm not just blowing off hot air. I trade commodities. My best trades of the year actually across both stocks and futures. The most money I made has been in corn and lean hogs. I mean, who the hell talks about that? Hey, what's your best trade this year? Corn. Me. I mean, made money on corn, whatever. But my worst trade has been live cattle. It's been a rough one. But anyways, so here in CLF, this is a nice base too. Now this is a multi-month. I mean, this looks like a massive ascending triangle. What's the weekly chart look like? Does this translate to the weekly chart too? Yeah. I mean, one could even make a case though. This could even be a rising wedge. Yeah, I mean, if I had to pick, look at this accumulation though. I mean, people are buying the stock. Let's look at crude oil. Let's look at the weekly chart on crude oil, because so much of this is correlated to crude oil. And look at this. That's a beautiful candlestick that we had this last week, and the volume surge too. We declined a couple weeks into a low, formed a seemingly higher low with respect to the trend, higher highs and higher lows. I'll tell you what, folks, if crude oil can really start, if we can close above 75.16 on crude oil on the weekly level, we're going to see triple digit crude oil, I think. Sucks for, pumping gas into your car. But I think crude oil is going to be back into the $100 area probably next year at this rate.
What do you think about Chewy? We have a couple of people asking about Chewy.
Chewy. Yep. This is an excellent segue into another trade idea I wanted to share with you all today, because I'm starting to see some activity in the pet related sphere of the market. So this is an interesting one. So this looks like a saucer pattern, which we talked about, but I'm going to call it a rounding bottom. And let's see, was this, we could even make an argument this is an inverted head and shoulders again, but I don't like it as much because I like to play the head and shoulders pattern. Okay, so if we're looking at a head and shoulders pattern, which is signifying a top, I like to see the right shoulder, which is what we had in Bitcoin. I like to see the right shoulder be lower than the left one, okay, because you get a lower high. The trend is your friend. In this case, let me. It's a little tricky for me to see. So the right, well, you know what? That's not really helpful. How was this low? This low was at 75.14. This low was at, wow, by 1 penny. By 1 penny, the left shoulder is higher than the right shoulder. So this is actually projecting prices into the 105 area. So I think, Chewy, if we can close above this upper horizontal trend line acting as the neckline, it's looking good. Look how accumulation started to happen. When you start to see, this is called a bullish engulfing candlestick that happened here on July 19th. When you see 1 day's worth of price action engulf or eat, essentially the price action of the previous days or the previous weeks, that's bullish. It's very good. That's very good. And we had that in Bitcoin earlier this week. That's why I've started to like Bitcoin again. Like I said, I change my mind all the time. I don't take my opinions too seriously. I care more about the bottom line. So the Chewy stock, I think it's very constructive. I would want to see a close above 87.38 on this one to get long. Now, this is an excellent segue into a stock that I actually just bought this past week, Elanco Animal Health. And we just triggered this one. This was put out for elite subscribers on Tuesday or Wednesday morning. And this is a beautiful, beautiful chart. I mean, if the breakout happens on this one, it belongs in a textbook, honestly, because we either, looks like an inverted head and shoulders again. You could make a case that this is a multi-year saucer pattern here, but we got long on a close above, what was it? It was 35.98. So the trade triggered on, Thursday when we closed at 36.03. We had some good signs of accumulation today. Did we close at a highest level in history? Let me see here. The ticker symbols are getting in the way. 34. Yeah, so this stock, Elanco Animal Health, just closed at its highest weekly level in history. And this is actually projecting prices into the $55, $60 range. So if you want to live life on the edge a little bit, if this stock does not open, if it doesn't gap up higher on Monday, I don't usually say this, but I'll make an exception because we're having a good time here on this Friday evening. You can still get long on this one. And we set the stop loss on it. What was it? This is a great risk reward ratio. If we close below this June 8th low, let's say at 33.35, be willing to take a little bit more of a potential loss, depending on where we, I don't buy at the open, but maybe midday. Just, you know what? You're responsible for your own decisions in the market at the end of the day. I can give you the tools, but at the end of the day, you're the handyman for your own portfolio, right? I really like the stock, and I think it ties into the whole Chewy play too. Elanco Animal Health, I think they do like medicine for pets. And I mean, let's face it. I mean, in the last year or so, I saw a really funny article, or did I hear it on the radio the other day? It was like, dogs are depressed because people are going back to work now, but cats are happy. It's like the cats like being by themselves, but the dogs enjoy the company of the owners. Anyways.
What's the ticker, Gianni, for this one?
ELAN. Elanco Animal Health. I really like this stock. It's like I said, it just triggered, so we are long. I own it in my portfolio right now, but I like this being a $55, $60 stock in time. I saw CLSK in the
Clean Spark. We had a Renor. By the way, thank you guys for being here. Taking your education seriously as well, Gianni. Definitely, we're here just grinding for you guys, making sure that we can provide the education that we know you guys are looking for. So yeah, let's get back here, Gianni.
Renoir Lumiere. Where are you? Are you in France, Switzerland? What French-speaking country are you from? My mom was born in France, in case you were wondering. So on this one, CLSK, we have a descending channel here. It could be a falling wedge. It's been correcting from its high in January. Let's look at the daily chart here. I like to, this isn't the type of play I usually make. We did have an oversold reading on this stock in late July. So I think there's better opportunities out there right now. If we do close above these highs from mid-June, we'd have a higher high, and at that point, we could get long. I was trying to play the long side of this stock earlier this year, but we got stopped out, and I just moved on to the next one. I tell people, don't marry your positions, marry your spouse. You really can't take your losses personally. You got to live to trade another day, and you get caught holding the bag. It's a lot easier to recover from a 7 to 8% stop loss or drawdown on a position than a 30% one. And then you really got to, you got to get more than 30% on the upside to recuperate your losses. And what are the odds of that? It's possible. We get 30% winners pretty frequently, but you don't want to rely on that. It's more beneficial psychologically to just focus on the risk management. Hey, I was wrong, because you know what? A lot of times I'll get stopped out of a stock, and then I'll like republish it like a couple weeks later. That happens more in the elite service because, you're getting more periodic picks, but it just tells us that the timing was wrong. And, there's two axes on the price chart, right? There's the x-axis, which is time, and the y-axis, which is price. And if you're neglecting one at the expense of the other, I may be giving you a hint to one of the alpha factors again. We look at time, because time matters. Time is more important than money. Time is finite. We all have an expiration date from this lovely planet. Don't mean to sound morbid, but it's the truth. And, it's a very important variable with respect to trading. It just so happens that, patterns tend to unfold and build bases over, statistically replicable periods of time. And we take that into account in our elite service. So.
Right. And we just definitely want to thank you, Gianni, for being with us here. We know you're a busy guy, but definitely what let's say closing remarks here you have in regards to generally, the subscription, the market overview, everything that really how you piece everything together.
Yeah. We want you to learn. I want you to have the same tools at your disposal that, I fortunately had bestowed upon me. And, there's no reason why you can't do it as well. And in terms of the market, we just closed at the highest, a couple last charts. The S&P just closed at its highest weekly level in history this past week. The Dow Jones just closed at its highest weekly level in history this past week. And the Nasdaq just closed at its highest weekly level in history this past week. Ladies and gentlemen, we are in a bull market, and the trend is your friend. Bull markets climb a wall of worry. I wouldn't be surprised to see the Nasdaq hit the high 15,000s, low 16,000s. We're in QE. Liquidity is high. Where else are you going to park your money? At the end of the day, this is a matter having the skill of being a successful speculator comes very much in handy when you get 0% at the bank. Crypto is changing that a little bit. You can get 5 to 7% clips on saving accounts. But we don't live in the days. The old world is no longer here. And, putting your money and living off the interest in a savings account, I really don't think is going to cut it these next few years. And so what else do you have to do? You're going to get 1.5% for tying your money up for 30 years in bonds? No, thank you. I'll buy stocks. I'll manage my risk effectively. I will be willing and able to admit that I'm wrong when I am wrong, and, cut my losses short, let my winners run. And, look to outperform the market via focusing on relative strength, owning the strongest stocks within the strongest sectors, and avoiding markets and downtrends like the plague. And it's very simple principles that we're sharing with you. We want you to learn. We want you to capitalize on these opportunities. The barrier to entry has never been lower for stock trading. It used to be back in the day that just to buy a stock, you would pay hundreds of dollars in commissions, and that's not the case anymore. It's 0%, $0 commissions. So it's not costing you anything to admit that you're wrong. It's never been easier to admit that you're wrong. We're in the age of information. Make the best of it. That's all I got for tonight, Rodrigo.
Well, thank you very much, Gianni, for being with us. We definitely appreciate you. You are going to continue the conversation with the picks on the chat room with the subscribers. And, you know, Gianni does this every single day, just so you guys know. This is a pretty deep dive, but, I mean, he's doing this every day. So everybody that's subscribed to Gianni's breakout newsletter and his chat room, they do have full-time access to him in the chat room. I'm going to stay for some Q&A so that we can go over this in a little bit more detail. But Gianni, thank you so much for joining us, and we are looking forward to always having you here and bringing in that education that we know everybody else here wants. Thank you, Gianni.
Thanks, Rodrigo. It's been a pleasure as always, and enjoy your weekend.
You too, man. Thanks. All right, guys. So we're going to take a little bit of a deep dive here. I just want to show you really how this whole thing works. I'm going to put in the link for the chat room, but I do want to show you a little bit of the chat because I do hang around there a lot. But on that note, I do want to give you guys a little bit of my background. Obviously, I'm not like Gianni, but ultimately, I did start as a retail trader, and I did make a couple mistakes, several mistakes that I really wish I had, like that, you know, that mentorship, that education that honestly, as retail traders, we don't get, even if you are, you know, in finance or whatever. They really just barely touch on this. But you can see here the chat room, but you know, that's where Gianni's there all day, grinding, talking about trades and all that stuff. As you can see, there's some charts there so that you can do some technical analysis with him. But as far back to really how this all came up together. So when I started retail trading, you know, I really didn't know what I didn't know. So I started in public chat rooms, and I figured I was getting trapped in like pump and dumps. And ultimately, you know, that's really not the best way for you to start out. I did not have like a proven strategy. I was staring at markets, staring at screens like all you guys are, no feedback, and much less from a mentor like Gianni. So this is something that I call vacuum trading, and a lot of retail traders do fall for this. It's one of the main reasons why retail traders do, you know, tap out of the market. So that's mainly due because you don't have that feedback, that education that ultimately, you know, is that filter, right? You need to filter your trades through somebody that not only has experience, but is in the game, somebody that has been in on the institutional side on both sides of the coin, because that way there's really not many surprises you can have. And ultimately you see that he's using the stop loss for his trades. We encourage responsible trading, but you know, really that's what we're trying to avoid, right? Going into the Reddit chat rooms, you know, you do want a verified community of traders that are thinking alike you, and also guided by a mentor like Gianni. So any questions that you guys have about the subscription or about the chat room, let me know. I'm just going to be here for a couple more minutes answering any questions you have, and just showing you really quickly here the chat room where Gianni's there pretty much grinding out picks all day. I know you can, so let's say if you ever have any questions, you know, you can always just hop in there. Gianni's more than happy to go over any questions that you might have. As you can see, you know, breakout trades here. You have the breakout monthly. You have the breakout enhanced. Let me just load this up. So breakout monthly, this is the starter one. Then you have the breakout weekly. This is one pick per week, the breakout weekly. The breakout monthly is one pick every 2 weeks. And the breakout elite is 3 to 9 picks per week. And you get video recordings from the picks as well, where Gianni does the market updates, the portfolio updates, and all that. And ultimately, you have the big daddy of them all, the Inner Circle chat room, where you have full access to Gianni, basically asking him any questions about crypto, markets, trades, strategies, your strategies, how you can really, you know, close any loose ends there that you might have. But just wanted to show this to you guys. And if you have any questions, just put them in the chat. I'll just stick around here for a couple more minutes. And for all you guys that are emailing here, I have a couple emails that I've received from you guys. Just so you know, once we're off the stream, I'm going to get back to you guys. This offer does end at midnight. So, we're going to have to cut the stream here in a little bit just so we can get back to everybody that wants to sign up for the chat room. So I'm just going to leave the links here one more time before we head out. And that way, if you do have any questions, I'm also going to leave my contact information so that you can reach me anytime. All right, guys. So I'm leaving my information here in case you guys want a little bit more details on the chat room or the subscription with Gianni, breakout newsletter with Benzinga. And I just want to give a shout out to you guys for being here with us late at night, taking care of your education. You have to do it. Ultimately, Gianni's the best man to do this for you. I've learned a lot from the man. Honestly, he does have that experience that retail just doesn't have, right? That training. So if you guys have any questions, my contact's there below. And thank you very much for joining us, guys. Have a great day. Happy trading.